Good morning. This is Ron Brown again. It's January 28th, 2024, Sunday morning. I'm going to do a market analysis and show you something else that I've been working on, but I'm not going to spend a great deal of time doing this. If you're like me, you hate to sit and watch long-winded videos, so I'm going to try and make this as concise as possible. So I'll use HGS for market analysis. It's my primary program. I do use Thinkorswim for trading, but other than that, I occasionally use EdgeRater, but my primary focus is on HGSI. As always, the standard risk disclaimer: any stock index or ETF mentioned in this presentation is not a recommendation to buy or sell. All trading strategies are used at your own risk. If you're not using High Growth Stock Investor, you should, and hopefully this video will show you why you should be using it. Just go to highgrowthstock.com and click on the link. You can order the trial. No credit card is required. Okay, let's get into it. I'm starting out here with the NASDAQ Composite. This is what I review every morning and send out to the mailing list, and let's just take a look at it. I'm going to go down here to NASDAQ Composite, and I'm going to activate this arrow. You can see that using the Wyckoff indicators, volume was less than average, the spread was narrow, and the close was down. Now if I go up and look at the chart, you'll see that that corresponds to this, and that same information is up here in this window. Sentiment is neutral. We do have a no supply, a sign of strength, which is right here. This is a small body. You can see that volume was down. That's why this no supply was generated. The internals were flat. The advancing volume surpassed the declining volume. New high, new lows were slightly down, but still stronger. And then the general direction of the AD line is flat to slightly positive. Now if we look back down here again, you can see that the 3 crossed the 6 13 days ago. The volume point of control crossed 14 days ago. And here's the percentage price change for the week. I'm sorry, for 1 day, 0.14 minus, but for the week it was up 0.4. For 5 days up 0.9. For 21 days up 2.5%. And looking over here, you can see the volume numbers, the last volume and the 90-day moving average volume. So this volume was quite slightly down from the average, and that's what we're seeing right here. Now looking back down here, you can see that many of the indices or indexes were positive. There was activity and strength in the Bitcoin arena. And I have a couple of ETFs in here, a trust and an ETF, just to track where the strength was, and that we saw some strength on Friday. If you look here at the NYSE, you can see that it was up for the day, for the week, and for 5 days. So even though the NASDAQ was down slightly on Friday, the bias is still up. The tendency, more than likely, the market's going to continue higher. Now let me bring this chart down here. So you can see that looking here, the trends are all up. It is stalling a little bit, but I just don't see a whole or a great deal of deterioration yet. Let's take a look at some of the other charts that I have in here. Here's the NASDAQ and the NYSE internals. You can see on the NYSE advancing declining stocks, more positive than negative. This is NASDAQ here. It was flat. NYSE was stronger. NASDAQ advancing versus declining. Volume was positive. So was the NYSE and the new highs, new lows. Slightly down on the NASDAQ, flat on the NYSE. So not a great deal of deterioration yet. Okay, here's the relative strength of the NASDAQ to the S&P 500. You can see that this blue line turned down sharply. This means the S&P 500 is outperforming the NASDAQ, and we know the S&P 500 hit a new high this week. I'm just going to click on the S&P 500, go back up. Well, I don't think I will switch charts after all, but you can see the S&P 500 hit a new high. This came down because it's the NASDAQ internals relative strength versus the S&P 500. Let me go back to that NASDAQ composite chart, and let's go down, look at a couple more charts. That's the one I was on originally. Here's a McClellan oscillator. You can see that the oscillator bottomed out down here and turned up. Pulled back just a little bit, and it has a slight upward bias, and I added the summation index to this chart. So when you download the chart, you're going to have the summation index. It's a longer term look at the strength of the internals. Okay, the next chart is new highs versus new lows. You can see when the market was really moving up, the new highs were up here. They've come down, but they shot back up. Put the crosshair on at this point, and as the market has stalled, you can see the new highs versus new lows coming down, but also you can see the new lows continuing down too. Finally, I'm just going to drop down to the advanced decline line. I can pull this down. You can see that as the market was moving up here, that the AD line was actually coming down. But recently, with this spurt here, the AD line was moving up. We have had a slight pullback, and it's essentially flat right now. But no real strong deterioration. Now, when the market, when the AD line was doing this as the index was moving up, it certainly looked like we could be in for a pullback or a correction, but I just don't see it yet. The only weakness we really saw on Friday was the SOX. You can see down here at the bottom, and it was down for the day minus 2.9%, 1.5 for the week, 0.8 for 5 days, but over 21 days it's been up 3.2% and 4% since the beginning of the year. So it's been really strong. I'm just going to bring up a regular chart here. Just do a quick white one here, and you can see that there's no volume for this index until we go into the indexes that HGSI creates. Here's a signal, but these signals are really not valid without volume, so I just ignore them. So this leads me to the broad market indices, and now I'm going to switch views, going from the top-down process views to the HGSI scorecard views. Here's percentage price change 1 day, and we'll start there. And make sure I'm sorted on raw combo, and you can see these indexes were up for the day. This is all securities. Everything above this, including the sector indexes and so on, was up for the day. Now, if I go to sectors, change to the index group, you can see that 8 of the 10 sectors were up for the day. And that's why I'm not convinced this market's ready to roll over. Remember, the S&P 500 just hit a new high. Now, where was the strength on Friday? It was in the energy index, up 0.8, up 4.4 for the week, and 4.1 for 5 days. So this is where the money started flowing last week. You can see the 3 crossed the 6 3 days ago, and the VPOC crossed 4 days ago. I'll just bring up a standard chart where we can see some of these. I'll just stick with white charts, and I'll go to my number 2 chart. You can see the VPOC where it crossed over and where the 3 crossed the 6. Now this is a market cap weighted index created by HGSI, but we can get VPA flags on this. We can get the volume pocket pivots, and I'm going to get into that a little bit later, something I've been working on. But you can see that the energy index moved up sharply off of these lows. Okay, let's just drop down to the technology index. This is where we saw a little bit of weakness. I'll get a little closer here. You can see that there are no negative VPA flags here. The 3 is still above the 6, which you can see right here, and the volume decreased like I pointed out earlier. Now I'm going to back out of the sectors, just go back, and let's take a look at the S&P 1500 because it includes the 500, the 400, and the 600. So I like to use this to look at a broad, or take a broad look at the markets. Now I'm going to go into some specialty charts that I have, HGSI index charts, and I'll just take a quick look at this one and then move down to the others. This is the A accumulation versus the E accumulation. I'm going to bring this up. Here is A, here is E. You can see that the A's have come down a little bit, but not too much. Here's the A's and the B's and the D's and the E's, and they're pretty much flat, coming down a little bit on the accumulation. Looking up here, this is where I was more concerned that the market was going to go down, because you can see that A accumulation came down and it actually crossed under E accumulation, and the same thing on the A and B versus the D and E. It came down, but now it's going back up, and the A went above E right here. So I'm seeing strength still. This was really an anomaly when the A's and B's were going down and the market was pretty much holding steady. I want to point out that the fan, this is the 18, this is the 50, this is the 100, and the 200, it didn't get close to crossing over. It remained strong. Okay, I'm going to drop down to a different chart. This is Chaikin. You can see the accumulation is still above the 0 line. A little bit of a deterioration up here, but we're still in B accumulation. This is the advanced decline line for the S&P 1500. You can see that it's going back up now. As I pointed out, here is where it was coming down, drifting down, and then it moved down pretty sharply there on this little pullback, but it has reversed since. These are the percentage of stocks above their 20-day, 30-day, 50, and 200-day moving averages. Pretty flat, but there is some movement here, the percent above the 20-day. This is the 50-day moving average of the 20 days. So we're seeing some strength there. This low is higher than this low. This is pretty much flat, as is the 200. Now I'm going to go to my potential buy-sell signals. This, as those of you who have been with us for a long time know, that I generated this a long time ago, and it works pretty well. When the advanced declines are 3 to 1 at least, and the same thing for the volume, you get a light green. And if these other factors are green, the force index 2 and 13 and the VPOC, you're going to get a weak buy signal. So here was a weak buy signal here. Here's another one here on Thursday. And this was a sell signal here. You can see that it was kind of got chopped around. But another sell signal here was at the bottom. At the same time, we were getting some positive VPA flags here. This is a strength seen returning after a downtrend, and then this confirmed that strength, and the market, that happened on the same day. We got a weak buy signal. You can see the 3 is still above the 6 here, and that's a good sign. There are volume pocket pivots down here, which indicate that these volume spike up days are greater than any down days in the previous 5 or 10 day period. So it just looks pretty decent to me. Let's take one more look here. I'm going to look at this. You can look at the all of these warehouse fields that I put in this chart, and you can see that 54, almost 55% advanced, 44% declined. These trends are up. So I just my bias is more towards the upside. I know it's a risky market, it's an extended market, but you can see that the flow still seems to be positive. Okay, I'm going to move on. I think you get the drift of what I'm seeing here. And I'm going to move down to I'm just going to go to all securities. The easiest way to get there is to hold the alternate key and hit the space bar. And then I'm going to go down here. And I've been working a lot. If you've been following what I've been doing, I've been working a lot on money flow, and it seems to be working out quite well. Now here's money flow intraday. I'm doing this on the weekend, so nothing's going to show up here. I haven't updated. Thinkorswim does provide the last intraday over the weekend, but I haven't updated it, so I'm just going to stay away from there. Let's just sort on this. Money flow in all securities, and the sort is on the industries up. And you can see that most of these are, well, here's one biofuels, but most of these are Bitcoin related, crypto related stocks, and those fall under other financial services. And that was the second strongest industry on Friday, up 2.61%. Marine shipping. Money continues to flow into these marine shipping stocks. Look at this. First of all, let's go back to this. Notice that the crossover days just happened on Friday on most of these other financial services. But as I get into marine shipping, you can see that there are several old signals here. Just bring one of these up. And now I'm going to go to, let's just go to a daily black chart here. Actually, I'm going to drop down to that number 2 chart, and you can see that this stock, it hasn't been smooth every day, but from this point on, the 3 stayed above the 6. It's been choppy, and you can see that the group rank is 88. The relative strength rank is 92, but this group has been moving. Let's take a look up here at the industry group. The group itself is cyan, industry group, and the green is the strength compared to the industry group. So here's the industry group, and on Friday, or this one's stalled a little bit now, but it's still up. You can see that it underperformed its industry group a little bit. Let's take a look at the next one here. This is also in marine shipping. And you can see this one's had a massive move. Now notice the blue area down here. These are 5 and 10-day pocket pivots using the formulas. It was a pocket pivot here, but when it gets up here, it's no longer a pocket pivot. But these volume bars are much higher than any recent down volume bars. The down bar plus the volume over a 5 or 10-day period. Now I want to take you to a different chart. I've been working on this. If you go to the undercut and rally charts, these charts here are new, and I put in a new one for the a weekend. Okay, this chart that I'm going to go to, it's down under the 5 folder, the undercut and rally charts. And go down to number 12. I have these 3 charts here. This is for the positive scan, or looking for stocks that have these blue areas, blue bars on heavier volume, and I'll explain this in a second. This is up, this is down, this is up, this is down. Nothing's going to show up here because there are no conditions met on this stock. And this is a combination. Let me zoom out here. You can see there are some red, pink bars clear out here, but this is what I'm looking for. These blue bars are the what I call the pocket pivot bars. This would be a pocket pivot, coming out of a pocket pivot right here. But as long as the volume is greater on any of these bars than any of the previous 5 or 10 day down volume, let me bring an arrow up here. You can see I put these fields in here. So what this bar right here is 184.4 or 84.4% greater than any down bar over the previous 5 days, and 72.9% greater than any down bar volume, or a down bar with volume over the past 10 days. I put this in here so you can see how much of a volume spike it is. Now I'm experimenting with this to look for stocks that are showing the pocket pivot type volume compared up volume compared to down volume, or vice versa, so we can find stocks that are on the move. The other conditions are that there has to be a VPA flag within a 4-day window. In fact, I'm going to make a change on this chart right now. I'm going to pause this. And here it is. I added days since the last VPA signal equals 0, and you can see there were 2 VPA flags on this. So when this fired, this VPA signal was going off and it was meeting the criteria of the pocket pivot volume. So I think this will be very helpful to find changes in volume when compared to the last 5 or 10 days, and maybe be able to jump on some of these stocks that are just starting to move. Now, you can go through and just flip through charts and look like this. This is money flow in, but I've made it easy for us because I've put these scans together. And these are experimental because I'm still working on them. But here's an end of day, and this is sorted on the same thing, the industry groups. And you can see that these marine shipping stocks right here all should come up with these green bars. So let's just do it, flip through them. There's the one I just looked at. Here's another. Here's another. And another. Now, some of these look a lot better than others. And by the way, you can look over here in these columns and see how fresh the signals are or how old the signals are. Here's Stealth Gas. It's 10 days ago was the crossover signal. And here you're seeing money flowing into this stock. I'll zoom out on this. You can see the down conditions were met at this point on this rose-colored bar, but then it was reversed the next day as the group started moving up. So I'm not going to spend a lot of time on this right now, but you have VPA with high volume, experimental scans, stocks, industries. These are ETFs. You can see these are ETFs. And then the next one, if I can find my way back here, these are high volume experimental scans, stocks with weekly options. So let's look at MicroStrategy, for example. This is related to Bitcoin. A lot of their assets are in Bitcoin, I understand. So here is a signal with a VPA flag. Days since last signal 0. And the volume is 24.5% greater than any down volume within the last 5 days. But this volume, you can see this number here, this negative number, percent volume divided by the previous 10-day down volumes, a minus number, because this volume did not surpass this minus volume bar here. So that's what this is telling us. Okay, I'm going to end this video. I hope I didn't confuse you with all this, but just try experimenting with these during the week. If you have any questions, send me an email, and hopefully we'll do a question and answer session one of these days, do a live session. I keep promising that, but I never seem to get around to it. Have a good weekend.